You're all very welcome to the second webinar in our sustainability reporting series, focused this time on the European Sustainability Reporting Standards. I'm Dee Moran and I'm the Professional Accountancy Lead here in Chartered Accountants Ireland. And together with my team, we look after the technical area in the Institute, producing guidance, responding to consultations and making representations on behalf of members. I'm delighted to be joined by Orla, who is a Director in Financial Services Advisory in Grant Thornton, Ireland. And Orla is an FCCA with a background in financial reporting in the investment funds industry, and more recently, Head of Finance Advisory in GT. Orla is currently working within the European Financial Reporting Group, or EFRAG, Secretariat, on the development of the ESRSs across sectors, and she's been in this role since June 22. And given this particular role, Orla, we are very grateful to you for sharing your knowledge on these standards. So if I might just give you just a very short summary of the CSRD. So this is the EU Directive on Sustainability Reporting, and it was adopted by the European Parliament and the Council of the EU at the end of last year. And it is currently being transposed into Irish law, and we await the draft legislation. So it introduces mandatory assurance for the first time initially, and the timelines for it are as set out there. So 1 January for any of the very large companies who are already subject to the NFRD, other large companies from 1 January 25, then they listed SMEs from 1 Jan 26, and then other non-EU companies, etc. from 1 Jan 2028. A lot of companies have said to me, this is for large companies, why should I focus on it? So I would just say to you to keep in mind that actually a large company is not that large, and smaller companies will most likely need to be compliant with certain aspects of this if they are part of a supply chain of a company that is within scope. So just very quick glance on the CSRD. So as I say, replaces the NFRD, which has been in since 2014, and it will apply to approximately 50,000 companies versus the 11 that we have at the moment. In terms of scope, it is forward-looking information which has been sought, unlike current reporting, which is a lot of backward-looking information in nature. There will be a separate section for sustainability reporting as part of the management report, rather than having a separate sustainability report, which is currently the case. Affected companies will be obliged to provide information in accordance with the EU taxonomy regulation, which is a classification system establishing a list of environmentally sustainable economic activities. So it kind of establishes a common language for everybody. And this hopefully should assist companies with understanding which economic activities can be considered sustainable. It does bring in double materiality. So this really requires an entity to report on sustainability from two perspectives: how sustainability factors affect the company, which is the financial materiality, and the company's impact on society and the environment. This is the societal and environmental risk. And Orla can hopefully shed a little further light on this concept. Reporting format is XHTML or machine readable, and there's electronic tagging. So this should make it easier for comparison, for analysis, etc., etc. The applicability is to meet two of those three criteria, so 250 plus employees, 40 million turnover, 20 million assets. As I say, actually a large company is not that large. And mandatory level of assurance, as I've already said. The CSRD does introduce a sustainability assurance qualification, and there will be grandfathering available for existing RIs, and for others there will be practical training, which at the moment is 8 months, and an exam if they want to be an assurer. And there is also an option to allow separate firms to complete the financial and the sustainability audit. And as you'll hear from Orla shortly, the EU has created its own sustainability reporting standards, which are currently going through the approvals process. So with that, I'm going to hand you over to Orla to bring us through those. Thank you, Orla.
Thank you. Delighted to be here today to talk about the European Sustainability Reporting Standards. And I might just touch slightly on EFRAG just at the start, just for context for people. So EFRAG, or the European Financial Reporting Advisory Group, were asked by the EU to advise them in relation to the development of the standards under the CSRD. So they're not a conduct authority, they're not an enforcement authority. Their role is really to advise the EU around these standards, and they have delivered their first set of standards to the EU Commission, but it's up to the EU Commission to finalise those standards and put them into law, and that's the process that's happening at the moment. There has been a bit of a stall on the next set of standards coming in, so they will be the sector standards, so that undertakings have enough guidance and support to implement the first set of standards which have been delivered to the EU. So people may have seen some stuff in the media around a delay on the development of ESRS. That's what it's about. The first set of standards are still certainly going to be ready to go, as far as we're aware, for implementation next year. So that's just a little bit about EFRAG and that process. So what am I going to go through today? So I will go through, not in too much detail, you'd be glad to know, the first set of European sustainability reporting standards. So the set of standards that are currently with the EU Commission and the national governments to enact into law for the first set of undertakings. I'll go through ESRS 1 and ESRS 2. So these are what we call the cross-cutting standards, the architecture of ESRS and the general disclosures. And then I will touch on the double materiality concept, because it's definitely something that's of interest to most people and something that's new, and also some of the topical, some of the topics within the ESG standards that have been issued as part of set 1, and then just a couple of considerations for undertakings implementing sustainability reporting for the first time. And next slide. Yeah, so this is the first set of standards that have been issued to the EU, and these are the ones that are first to be implemented. So Dee has touched on that timeline for large and listed entities. Those reporting under the non-financial reporting directive will have to implement this set first for financial year 2024. So these are the first set of standards to come. These are what they call sector agnostic standards and cross-cutting standards. So the cross-cutting standards are ESRS 1 and ESRS 2. So ESRS 1 are your general requirements. So how you actually apply ESRS, it's the architecture of ESRS. And ESRS 2 are general disclosures. They're entity level disclosures. So across your governance structures and your strategy, for example, not a topical level of ESG. And then you've got 10 topical standards across environmental, social, and governance. You can see you've got 5 there in environment, 4 under social, and 1 under governance. And we'll go through them in a little bit more detail. Sorry, so within ESRS 1, this is the architecture standard of ESRS, and there's lots of reading in here. I'm going to go through some of these in a little bit more detail than others. So for example, I'll go through some of the context and the language within ESRS, which you will see throughout the standards, the double materiality principle, value chain. So when entities report, they will report both on their own operations and their value chain, how to prepare the statements, due diligence, time horizons, the structure, and transitional provisions over the first 3 years. Next slide. So the key concepts and how to comply with ESRS. So this is really around, I guess, some of the high level language included within the standards and what you'll see throughout the cross-cutting and topical standards. So one of the key concepts of ESRS is that undertakings disclose all material, and that's really important. So material information regarding impacts, risks, and opportunities across ESG. And this takes in the double materiality. So your impacts, your risks, and your opportunities across financial and impact materiality. So impacts can be positive and negative. And you'll see in the disclosures, it's asking you to talk about positive and negative impacts on people in the environment. So it's not just the bad stuff and the stuff that costs money. It's actually what are the positive impacts. Risks and opportunities relate to the financial materiality aspect. And within the ESRSs, your undertaking has to complete a double materiality assessment in order to determine what matters are material for your undertaking and so what you need to disclose. So within the standards as well, there's a couple of different types of disclosures. So you've got disclosure requirements, and these will be marked as such. And these are things that you have to disclose and you have to follow if an item is material for you. You will have data points sitting under that, and you will need to determine if those data points are applicable to your undertaking. And then you will have application requirements. So application requirements are really additional guidance to those disclosure requirements in how you will actually include that information. So you'll see the terminology actually determines which is which there. So when you read through the standards, if it says the undertaking shall disclose, that's something you have to disclose if an item is material for you. May disclose and shall consider are things that are more guidance, and they're included within the application guidance within the standard. And they'll be in 2 separate sections across the ES and G standards. Next slide, please, Dee. And this is just an example here of the disclosure requirement versus the application requirement. So what has to be done versus what is guidance. So under water and marine resources, which is one of the environmental standards, under E3, you need to, the disclosure requirement E32 says the undertaking shall disclose its water and marine resource actions and the resources allocated in their implementation. So if you determine as part of your materiality assessment that water and marine resources are a material sustainability matter for you, you have to disclose this item. And then on the other side, you can see there's an additional application requirement attached to that disclosure requirement that gives you just a bit more guidance. So it says when providing information on capital expenditure, so this is a financial materiality disclosure, the undertaking may consider expenditures relating to storm, water, drain, rehabilitation, et cetera, et cetera. So it gives you more guidance in how to actually disclose those items. So types of disclosures. So within the standards, you'll see lots of different types of disclosures. It's not just what's your GHG emission or what's your water usage. It looks across the whole sphere within your organization of what you do and how you do it. So you'll have disclosures relating to your governance structures. So your governance process, controls, procedures used to monitor and manage impacts, risks, and opportunities. So your impacts, risks, and opportunities are your financial and your impact materiality items. It'll ask you to describe your strategy and how your strategy interacts with those material impacts, risks, and opportunities, and vice versa. It asks you to describe how you actually conduct that process around impacts, risks, and opportunities, so your materiality assessment. And then it will have metrics and targets, so more data points. But those data points will be point in time and over time. So as you move from cycle to cycle, what have you actually improved and changed? So it actually looks at transitions as well as point in time information. And here's another example here. So under E4, which is biodiversity and ecosystems, so that's standard environment E4. You've got a mandatory requirement that is linked to ESRS 2 around your impacts, risks, and opportunities. And it says you have to describe the process to identify material, biodiversity, and ecosystem related to impacts, risks, and opportunities. So this is your materiality assessment. How have you completed? How have you determined that these are material? And then within that standard as well, you will have some that are subject to additional materiality assessments. So you need to determine if some of these topics are material for the undertaking. So for example, under SBM2, so that's strategy and business model. So it's a strategy disclosure, material impacts, risks, and opportunities in relation to biodiversity and ecosystems and their interactions with the strategy and the business models. So it can become quite complicated. And within that materiality assessment process, you really need to look at all of these different aspects. So again, some more key concepts to understand, and there's lots of concepts and lots of acronyms throughout the standards. So sustainability matters at the very core. This is what it's all about. So what are the relevant sustainability matters or topics for your organization? So if you are a bank and you have, branches in the west of Ireland and you decide to close those branches, affected communities, for example, would be a material topic for you. How does that affect the local community in terms of jobs and all those other things? And the sustainability matters take a layered approach. Some of them go to a more deeper level than others, and you can see the sustainabilities are listed in ESRS 1. So it works on a topic, subtopic, and sub-subtopic structure. So your topic might be, your own workforce. So that's ESRS S1. It's one of the social standards. And then your subtopic under own workforce might be the working conditions of that workforce. And then under the working conditions, your subtopic might be health and safety within those working conditions. So they work on all of these topic and subtopic structures, and you can have disclosure requirements linked to each different layer of this. And I mean, we're looking at set 1 and agnostic standards at the moment, but as we move into sector level standards, which is the part that I'm working on at the moment with EFRAG, this becomes even more deeper, because some of the individual undertakings, and depending on the sector they're involved in, would have additional topics within there that are relevant to their sector. So maybe within the working conditions, if you're a transport company, for example, you would have a lot of topics around, you know, I mean, workers sleeping in their trucks overnight, for example, and those type of working conditions. So there might be subtopics and subtopics within those, and disclosure requirements attached to those. So we've touched on disclosure requirements already. So they're organized according to the topical approach, so across ES and G. And then there's also the cross-cutting across your governance structure and your due diligence, etc. Sustainability matters, which we've touched on. And then sustainability matters applicable at sector agnostic and sector specific levels. That's what I just said there. So set 1 is sector agnostic. It's across all sectors. But when you move into sector specific, you might have more subtopics included there that are relevant to a particular sector. And then, as well as that, ESRS allows for entity level disclosures. So there may be something very specific to your organization that you feel is very material from an ES and G perspective that may be not reflected within the list of topics within ESRS. And if that's material, and so it's something that you should report on, and you can use other frameworks to do that. So for example, you could look at the Global Reporting Initiative, or GRI, you could look at SASB standards in the US. If they have specific guidance on how to disclose them on certain topics, you can use them as long as you reference them within your sustainability statements. And there's just an example again of a topic and subtopic. So under environment, our topic might be pollution. That's a high level topic. And our subtopic might be pollution of air. You might have pollution of water. You might have pollution of soil. You might have noise pollution, for example, again, back to transport. So there's a lot of, it goes deeper the more you go into the sector level. And then on social, that's probably the example I already gave. So own workforce, working conditions, and then working time. So the working time one probably would affect maybe seasonal workers or, you know, shift workers a little bit more. So if that's something that's relevant in your industry, that's something you need to report on. And a little bit more on disclosures. So you also need to report different items across those disclosures. So ESRS will ask you to report on your policies. So what's your policy in relation to working time, your actions. So if, you know, there's issues or grievances there around working time, what are the actions you're putting in place? Metrics and targets. So over time, how are you going to change that, improve it, you know, in order to bring it into to where you want to be. So it's going to ask you to do policies, actions, metrics, and targets for various different disclosure requirements. And that's just another example. I will skip that one, Dee, if you want to go on. A lot of these are the same. So just really to recap there. So the general concepts, there's a lot of information in there. I would say read ESRS 1. It does take a while, but this is where it all comes from. It's worth having a read of it because it is actually explained quite well, and there will be additional guidance coming out on these standards over the coming months. That's what's being done at present, along with the approvals through the EU Commission. So just to recap, I get the types of disclosures you'll see in there. So governance, your high-level structures around sustainability, identification of sustainability matters, your strategy and business models, impacts, risks and opportunities, so your materiality assessment, metrics and targets. Sustainability matters are at various different levels, so your topic, subtopic and subtopics. And then it just has the different types of disclosure requirements. So you have your disclosure requirements, so what you have to disclose if something's material, your application requirements, that will give you guidance. And then we have cross-cutting across all the undertakings. We have topicals across ES and G, and then we have sector-specific ESRSs, which are yet to come, but they will be coming. So down the line for the sectors. And yeah, so this just gives a little bit of an overview of the mandatory versus the requirements for materiality assessments under ESRS. So not everything is subject to the double materiality assessment. There are parts of ESRS that are mandatory. So if you're in scope for CSRD, based on the criteria, and Dee has given a good explanation of the criteria, you need to disclose certain items under ESRS. So not doing a materiality assessment. And those are ESRS 2, your general disclosures. So across your governance structures, your strategy, how you do your double materiality assessment and your due diligence process. So it's getting undertakings to not only just disclose the metrics that are across ES and G, but to really set themselves up to have a plan and a governance structure in place around sustainability. E1 climate is mandatory, and S1 own workforce, that's in relation to your own employees. The first 9 disclosures are mandatory for organizations with over 250 employees. And ESRS take a lot of time to sift through all of the other regulations that are applicable to EU undertakings. So you will see the likes of SFDR for anybody in the fund space, but the indicators and the requirements under SFDR come in under ESRS and are mandatory requirements. So it's aligning the other regulatory, I guess, frameworks and requirements of the EU into ESRS to make sure that there isn't any discrepancies there. And that's a big part of the standard setting process, is looking across those regulations to see what's relevant. And then on the materiality assessment side, so you have to obviously complete your materiality assessment, determine what's material for your organization, and then disclose accordingly. If something is not material, so if you determine a matter not to be material, so maybe water and marine resources is not material for your organization, it probably is for most, because most of us use water. You don't have to disclose, but you just explain through your due diligence process how you've completed the materiality assessment and determined it's not material. And then even if there are items that are material in terms of sustainability matters, but when you look within the disclosures and data points, there's certain data points that you feel are not relevant, you can explain why you're not including them, you can omit them. So there is some flexibility there as long as you explain. Next slide, Dee. Yeah. And then in terms of double materiality, so this is the question a lot of people are asking around double materiality and what does it mean? So, you know, one of the core concepts of double materiality is around your stakeholders. You have to engage with your stakeholders to complete your double materiality assessment. And those stakeholders are affected stakeholders, how your organization impacts stakeholders, internal and external, but also users of sustainability statements. So those people reading your sustainability statements, and they need to be part of the assessment process to determine your material sustainability matters. The materiality assessment there identifies the material impacts, risks, and opportunities to be reported. And when you deem something to be material, you need to look to ESRS to see what the disclosures are and report accordingly. On the non-reporting side, so it's what I've just explained there. You can explain if something isn't material, you don't have to include it, but you explain your process in looking at that. And if some of the data points are not relevant, you can exclude them and explain. And this just gives a little overview of the double materiality concept. So financial materiality, as accountants, are all very familiar with this. So really the concept that we use within our financial statements. So the outside-in approach, information useful, I guess, for investors, lenders, creditors, and users of other financial information. And you will disclose risks and opportunities that impact, for example, the company's cash flow, performance, cost of capital, access to finance, et cetera, and these will be written out within the disclosure requirements. You can identify what's financial versus what's impact. And then on the impact side, so the impact materiality is broader. So you're looking at negative impacts and positive impacts, and you're looking at actual and potential. And there's different criteria in there around what you would disclose. So actual negative impacts are based on severity and likelihood of impact. Potential negative impacts based on scale, scope, and remediability, and then positive impact based on scale, scope, so the actual of that, and the likelihood for potential impact. So that's the inside-out approach, and obviously looking broader at your impact on people and the environment as opposed to just financial impact. And then this is just a slight recap on what we've just discussed. So we've just looked at the type of impacts, the criteria against those impacts, so positive, negative, potential, actual, and what you do in terms of non-reporting if something is not material or if a data point is not relevant. So yeah, that's just a quick recap on what we've covered there. Next slide. You can go past that one, Dee. We'll do some questions at the end. Yeah, so sustainability due diligence. So this is really up top at your organization. How do you do your due diligence approach in terms of understanding your material sustainability matters and your impacts, risks and opportunities? And the guidance within ESRS comes from the OECD guidance on how to complete this due diligence. So it's aligned to OECD. And we touched on some of this already. So, embedding the sustainability due diligence into your overall governance strategy and business model process, that's what ESRS is trying to get to. Engaging effective stakeholders. So you have to engage your stakeholders to do your materiality assessment. You can't just decide this is what's material to me. You have to actually go out and ask your stakeholders. And I mean, you can do that via surveys, you could do focus groups. There's lots of different ways you can do it, but you need to document how you've done it. So you do actually have to do it. Identifies and assesses negative impacts on people and the environment, looks at how you take actions to address negative impacts and tracking effectiveness of those efforts. So that's your metrics and targets. It's the tracking effectiveness over time. And another example there, so this is within the social side. So ESRS S3 is affected communities. And under 3.2 there, you'll see you have to disclose your process for engaging with affected communities around impacts. So again, back to the bank and maybe the bank branch closing in the middle of the country, that's impacting your community in a lot of different ways. So that might be an example of how you would engage in terms of that to determine the impacts, risks and opportunities. And then ESRS 3.3 has your process to remediate negative impacts and channels for affected communities to raise concerns. So this looks at the remediation in terms of potential impacts. And a sample disclosure that might be included there is the undertaking shall disclose its general processes for engaging with affected communities and their representatives around actual potential material impacts of them. So you would ask your affected community questions around this. How will you be affected? What's the impact? And then that's how you assimilate to determine what's material and what you need to disclose. Slide. Sorry. And this is just some of the other information included within ESRS 1 or that architecture. Same as for financial statements, information needs to be of good quality, needs to be verifiable, it needs to be comparable, etc., etc. The time horizons within the ESRSs, you'll see various disclosures that ask you to disclose things over the short, medium or long term. This really just explains what that means. It's, up a year, up to 5 years, etc., etc. But it will be actually stated within the ESRSs. And an example there you can see under ESRS E1 Climate, which is mandatory. So this is a mandatory standard for all undertakings in scope for ESRS. It's asking you to disclose potential financial impacts from material physical risk. So this is a financial impact disclosure, financial materiality. And it's asking you, you can see there at the very bottom, to look at the impact. So yeah, so it has the understanding of how the risks have a material influence on the undertaking's cash flows, performance, position, development, cost of capital over the short, medium and long-term horizons. So it's not just a point in time, you need to look forward. And again, just some other information, very similar to financial statements here. This just talks about what you do if you have an error or omission in your sustainability statements. You pick this up in the following year, you need to go back and retrospectively fix it. If you have a post-balance sheet event, same type of treatment as for financial statements. You need to explain how you do your assumptions and estimates, how your inputs are used in terms of scenario analysis, etc., etc. Slide D. And then in terms of the structure of the sustainability statement, so the sustainability statement needs to be included within your management report. And there's an example of what it might look like on the next page, but the key components and what they look like. So the information is disclosed in a separate section of the management report and needs to be identified as such as your sustainability statement. The undertaking can include additional information from other reporting frameworks. I've touched on this already. So if your undertaking is reporting certain things under another framework, or they're linking to the UN Sustainable Development Goals, for example, and it's not something that's in ESRS, but you feel it's material, you can include it as long as you reference the other framework. Disclosures are in 4 parts. So your general information, so that's your ESRS 2, up top, entity level disclosures. How do you govern the process? Who's responsible for the process? What's your due diligence process? And then into your ES and G disclosures across those standards. Sector level additions should be disclosed by topics. So again, if you have something in the transport sector or in oil and gas or whatever, If you have something to disclose on pollution and there's something specific to you as an oil and gas company, which there would be clearly as an oil and gas company, you would add it in using the same structure. So it would follow on from the general disclosures under the pollution standard, and then you would include your undertaking or entity level disclosures within that same section. So you need to it's organized along the topics and the subtopics. And then entity level disclosures can be added, as I said, where it's not relevant. And as the sector standards are released and come into play, they're going to be across 39 sectors. The need for entity level disclosures will actually diminish. It's just there is a stopgap for a couple of years between agnostic and sector specific. So you will see that need for entity level disclosures to come down. And that's just an example of what it might look like. So very straightforward. So general information and then ES and G, and then across it, you will see the different standards within ES and G. So for this entity, it has everything in here, but you might only have climate and biodiversity if that's what's relevant to you, but it goes across that topical structure of ES and G. And that's just an example there as well of what it might look like. So your overall management report, so your up top information about your organization into your general information and general disclosures, and then across ES and G. And you can see the different colors there kind of represent the different types of disclosures. So your impacts, risks and opportunities management. So that's your mandatory side. Additional disclosure requirements from sector specific. So if you have additional disclosures under E1 climate in the transport sector, they then go in underneath the general disclosures from the transport sector from the agnostic standards. And then you can have potential entity level disclosures as well. So there could be a lot of disclosures in certain sectors. And then linkages to other parts of corporate reporting. So like in any other types of reporting, if you're disclosing information somewhere else in your financial statements or in other reports, you can link to that as long as it's clearly linked and it's clearly mapped to the disclosure that's required under ESRS. Slide. Yeah, and then transitional provisions. So there are some transitional provisions across ESRS. There's a 3-year transitional provision, for example, in the value chain, and the information to be disclosed around your value chain, as it might be difficult to get that information. And there are other transitional requirements as well around certain disclosures. So future developments of ESRS, both sector specific and agnostic, will reduce the need for entity level disclosures. So we've touched on that already. So that should bring down the outside the ESRS box type disclosures. In the first 3 years, you can disclose what has been included in prior years for entity level disclosure. So if you're already reporting at an entity level under a different framework, you can bring that into your first year of reporting. You can do that for 3 years, and then you need to try and transition into ESRS if the disclosure is there. Complement disclosures with additional information from other standards, as I said, so that's GRI, for example. Value chain information may be difficult to obtain. So you need to report on your own operations and your value chain for material matters. So things relating to your value chain that are material. And there's going to be additional guidance coming out on value chain reporting, as it is tricky and undertakings are finding it difficult to understand. So there will be a lot more guidance coming out on how to do that. But you can actually use other information in the first couple of years. For example, if you've got sectoral information or proxies, or you've got internal information about your value chain, you can include that for the first 3 years, but you have to put in a plan on how you're going to work with the actors in your value chain to get the information that's required. No comparatives were required in the first year, and there will be some phased in requirements which are included in ESRS 1 Appendix 2. Next slide. That's just an example there of the phased in requirements. So under ESRS S1, which is own workforce, you can see there the undertaking may omit reporting on non-employee workers for the first year of its preparation. So it's allowing you some transition, and they're listed within ESRS 1. And that's just a summary of what we've talked about. So talked about the time horizons in terms of comparatives, in terms of having to disclose across the short, medium and long term. Types of information similar to financial statements must be faithful, comparable, reliable, understanding. There are transitional provisions in place around the value chain and around other disclosures. Your due diligence process is really important. That's kind of your starting point. How do you actually ascertain what's material? You can cross-reference to other information within the management report and other statements. And we went through the structure and format, so what it might look like to include a sustainability statement in terms of the flow of information in the statement. Okay, next slide. So really quickly on ESRS, that was ESRS 1. I'm sure everybody's head is spinning after that. ESRS, you've only got one slide on, you'd be glad to know. And then we'll go into a case study, which is a little bit more practical. So it just helps you understand the steps in the process. So ESRS 2, so this is the mandatory requirement for all entities. And this is the entity level kind of structural governance side of ESRS. So it includes a couple of different requirements there. You can see around general characteristics. So disclosure requirements around business process 1 and business process 2. So this just looks at the general basis for preparation of your sustainability statements and the disclosures in specific circumstances and estimation in terms of time horizons and reporting, etc., etc. So this is kind of your basic, like the basis of preparation within the financial statements. So you prepare under IFRS, you prepare using this, using that. That's really what that is. It's your general characteristics and your basis for preparation. Your governance structures, we've touched on quite a few times. So the role of the administrative and management bodies in relation to sustainability needs to be disclosed. Integration of sustainability related incentive schemes. So where you have incentive schemes, it asks you to disclose, and that should be something that's built into your governance structures. Your due diligence statement, following on from the completion of your due diligence process and the due diligence principles, which we've looked at. And then risk and internal controls around sustainability reporting. So you need to look wider than just the reporting side. So looking at your internal audit structures, etc., etc. And then strategy and business models. So market position, strategy, business models, and value chain. So this basically is looking at probably larger organizations where you've got lots of different entities, and you need to not aggregate everything together and say something's not material. If you've got, you need to disaggregate that at different kind of operational level, sector level, etc., to see what's material for those individual points. You can't mask or greenwash or whatever they call it, but you have to look at it to make sure that within those individual entities, if something is material, you need to report it. And impacts, risks and opportunities around your materiality assessment, we've touched on that, and metrics and targets as well, we've touched on. So these are more the data points and how you move over time versus those data points. And then just really quickly, this is a very quick overview of what's included within the topical standards. So as we said, 10 topical standards issued, 5 across E, 4 across S, 1 across G. So in terms of climate, you can see some of the topics there. So climate adaptation, transition and energy, and this is mandatory. E1 climate is mandatory. Pollution, so pollution of air, water, soil, substance of concern. Water and marine resources looks at water withdrawal, consumption, water use and water discharges. Biodiversity and ecosystems, so biodiversity loss, impact on species in the ecosystem, and impacts and risks and dependencies. Circular economy, so resource inflows, outflows, and waste. And there'll be full descriptions of these within the standards, so you can read exactly what types of activities you need to consider. And then own workforce and workers in the value chain have very similar disclosure requirements, but one relates to your own workforce and one is workers in the value chain. And on the own workforce one, there's a more mandatory requirements. So we've touched on some of these. So working conditions, equal treatment of opportunities, health and safety, etc., etc. Affected communities we've touched on. So rights of Indigenous communities and how you impact affected communities within the area of your business. Consumers and end users. So topics there might include information impacts, personal safety, social inclusion, access, for example, access to services, and then business conduct, corporate culture, animal welfare, political engagement and lobbying, and corruption and bribery. And that's just a very short summary of the topics included within those topical standards. Okay, so case study exercise. So I'm not going to be doing all the talking now. So I'm just going to use the chat box here just for a very quick interactive case study exercise. So please do answer. It's not mandatory, but it just gets you thinking about if you're an undertaking and you're doing this for the first time, what are some of the things you need to think about? So pretty quick run through on this. Just check our time. Yes. Okay. So this is for a professional services firm called CSRD Partners. I'll just quickly go through what CSRD Partners are about. So CSRD Partners are a mid-sized professional services firm with an office base in 3 regions in Ireland. They have annual turnover for 2022 of 43 million, with assets valued at 18 million at the end of December 2022. 475 employees and 10 partners, both permanent and contract workers. Some projects are also subcontracted out to third parties to ensure coverage. And then hours can be long, as we know, in the audit world, but it's to be expected in the industry. So office and facilities are managed by external outsourced facilities management and catering companies. Staff facilities include an on-site swimming pool, gym and full canteen. CSRD partner services clients include multinational companies, regulated financial services firms, SMEs and public sector bodies. Okay, so first question here is, do we think CSRD partners are in scope for CSRD based on the criteria that Dee explained at the start? See who was still awake after all that. Yes. Yeah. And what criteria do we think they meet? So we have net asset criteria, turnover criteria, and employee criteria at a very basic level. So there's more complicated, obviously, scoping questions probably in play here about subsidiaries and stuff, but yeah, employees, they definitely meet. Turnover, they meet. Yeah. So they don't meet the net assets criteria, but it's a 2 of 3. And this is quite simplistic, just to be clear on that. So yeah, we're in scope. So as we know, CSRD partners are in scope. So I've talked about mandatory disclosure requirements versus those subject to materiality assessment. So does anyone remember which ones are mandatory? So now that we know they're in scope, what do they have to apply out of ESRS? Somebody must remember. Yes, correct, cross-cutting. So ESRS 2. So ESRS 2 is, so ESRS 1 is your architecture. So that doesn't actually include disclosures. It just guides you on how to apply ESRS. ESRS 2 is around your governance structure, your how you're set up in terms of your board and your committees around sustainability, your due diligence process, and your process around impacts, risks, and opportunities. So that's mandatory. And there's 2 other mandatory ones. Yes, E1, somebody has it, great. So E1 climate is mandatory for all undertakings who are in scope for CSRD, and in own workforce, that's correct. S1, so S1 requirements 1 to 9 are mandatory. Okay, so next question. So who do we think would be some of the relevant stakeholders for a professional services body to engage with as part of their materiality assessment? What kind of stakeholders do we think would be important to a professional services firm? Yeah. 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 So it could be a long list, I guess, depending on, how the company is organized. Facilities, yeah. So they have their swimming pool. Clients, employees, partners, contractors, service providers, maybe other professional bodies that they deal with. The regulator is probably, CARB, yeah. Suppliers, local communities, absolutely, local communities, yeah. So you can see the list might be long for your stakeholder engagement exercise to complete your materiality assessment. But you can do, you do your internal assessment first, and through your own, I guess, research and understanding of your business, you can come up with a long list, and then you reach out off the back of that. So yeah, all correct answers there. Why do we need to engage with stakeholders as part of the reporting process? Like what's the need to do that? Yeah, double materiality. Yeah, so like it is a requirement. So ESRS is basically saying, as part of your materiality assessment, you have to engage with your stakeholders. So it's actually a requirement. And then within your disclosures, you will need to you will need to disclose how you've actually done that. So if you look within the standards across the different topics, it will ask you to explain how you've engaged with stakeholders on certain matters. So it's required. Next question. So in terms of the value chain, and I know I didn't go into the value chain in any great depth because there is more guidance coming on that. So I think it's probably a separate session in itself. But I guess if you can't obtain information from your value chain, what would you do if you need to make disclosures? What do you think you could do if you can't obtain information from your value chain actors? Yeah, so proxies are allowed, yeah. You could use sectoral data. If you have information internally, I guess, from your knowledge of those value chain actors, you can include it. Look at the sector, make a plan. Yes, you have to make a plan. So actually there's a requirement in there to say, if you can't get that information, what's your plan to do it in terms of working with that those actors in the value chain? And there'll be crossover between your stakeholders and your value chain actors. So you probably need to do a process to identify both, but there will be a crossover there. Okay. Next slide, Dee. Next slide again. Thank you. So I've just listed out here some some sustainability matters. So which ones do we think might be applicable for a professional services firm if we were to look at those topics? So your overall topic is water and marine resources, own workforce and business conduct. And then your subtopics are the ones that are listed under those. So which subtopics do we think might be relevant for a professional services firm, given what we know about CSRD partners? Yep. Absolutely, working conditions, all of S1, yeah. Even within G, we haven't really talked much about G, but obviously for a firm like CSRD partners, it's probably relevant. Work-life balance, absolutely, 100%. I mean, a lot of the ones in G are probably relevant as well. So corporate culture, animal welfare, maybe not. Corruption and bribery, et cetera, et cetera. So all the ones we see in financial services, yeah. So client entertainment, yeah. So that would probably be like a sub topic. So that's where you're getting into, you can see to more granular detail at sector level. Corporate culture, corruption, bribery, yeah, absolutely. Okay, next slide, Dee. So this is just what a materiality assessment might look like if you complete it for a professional service firm or any other firm. And all of the topics that people put in the chat box there are probably correct, but I've just pulled out a few of them here. So you can see there, this looks at both impact and financial materiality. And I mean, if you look at any of the big company reports that are reporting under NFRD, some of them actually have included this kind of a graphic as their materiality assessment, and you can see the type of topics that they've included. So it just maps out where these topics are in terms of materiality for the organization. So on environment, I had water consumption and use, which somebody had said. On social, work-life balance, working time, health and safety. And on governance, corporate culture and corruption and bribery. And next page, D. You can go down again. We've done that bit. Yeah. So these are just some examples of some of the disclosures. So we've identified those material sustainability matters. Now we need to look at the topics that we have to disclose. So under water and marine resources, we've said subtopic water use is probably material for this undertaking. So we're going to look at disclosure requirement E34 water consumption. And that says that the undertaking shall disclose information on its water consumption performance related to its material impacts, risks and opportunities. And there will be more guidance within the standard there and some metrics you can apply to that. And the disclosure requirement there, so relates to its own operations and include total water consumption M3. So you can see there's the type of data points. So it does go down to very granular level. There are around 1,000 data points, I think, in the first set of standards. But remember, they may not all be material for your organization. And then into the application requirement. So this is the guidance. There's 3 application requirements against that disclosure requirement. And it says the undertaking may provide information and other breakdowns, for example, at a per sector or segment level. Next slide. And then just under S1 own workforce. So under S1 own workforce, disclosure requirements 1 to 9 are mandatory, which is what we've already said, and 10 to 17 are subject to materiality assessment. So down here we can see under the subtopic of working conditions and the subtopic of work-life balance, which somebody had noted, disclosure requirement S115 work-life balance indicators will be relevant. And it says the undertaking shall disclose the extent to which employees are entitled to make use of family-related leave. And this shall include, so shall meaning they have to disclose this if this is material for them, the percentage of employees entitled to take family-related leave, and the percentage of entitled employees that took family-related leave. So not just you're entitled to take it, but did you actually take it as well? And then the application requirement, there's 2, gives guidance on the leave types to include and definitions of entitled workers. So it'll give you a lot more information there. I think, yeah, and then on this is the last one. On business conducts, this is our governance one. So corporate culture, we said was material. And on this one, there's no subtopic mentioned, it's just corporate culture. So some of them will be more granular than others. And the disclosure requirement relates to corporate culture and business conduct policies and prevention and detection of bribery. And the disclosure there just says it shall disclose its initiatives to establish, develop and promote corporate culture, as well as its policies with respect to business conduct matters. Shall include a description of mechanisms for identifying, reporting and investigating concerns about unlawful behaviour and contradiction of code of conduct. There's 7 data points in there, so it's quite a lot. And then 4 application requirements around, how the leadership promote corporate culture and provide that direction to the organisation. I think that's probably it. Yeah, and just in terms of next steps, so just I guess to take it back to an entity level. So what are the things you should be thinking about if you're an organisation that has to implement CSRD for the first time, or if you decide you want to report voluntarily, if you're not in scope, which probably would be, it's going to come anyway at some point. So think about who in your organisation is going to be responsible for it and what stakeholders need to be engaged within the organisation in order to get that process set up. CSRD maturity level. So if you're reporting already, do you need to complete a gap analysis to what you're already reporting compared to ESRS? And looking at things like, are consolidations required? Do you have subsidiaries, etc.? The scoping can be quite complicated at that level. And then in terms of what, so people, process and systems. So resourcing, skills and capabilities. So do people understand their requirements? Is it going to fit within your finance function? What kind of data are you going to require, etc., etc.? And then in terms of your management report, so how are you going to actually draft those statements within your management report? So there is examples within ESRS, which I've shown you there. And then in terms of audit, really thinking about the cost and engaging with your auditors around that process. It's limited assurance initially, and then it's going to move to reasonable assurance. And I'm not an auditor, so I'm not going to try and even explain those requirements. I'm sure there's a separate webinar for that. But yeah, the audit part is a big part to consider as well. And then next slide. Yeah, so similar again. So just understand your organization's scoping. So who's in scope, who's not in scope, who owns the project. Sustainability is kind of a team sport. Everybody needs to be involved. It's reporting, it's risk, it's internal audit, it's the board, it's everybody. Everybody needs to be on board with it. Assessing your reporting process, your existing process, and how you adapt that to sustainability. Understanding the data. So where are you going to get the data? What data do you have? Do you not have? And engaging with your stakeholders, really important. Next slide. That's it. I'm done. So yeah. So thanks everybody for that. I know it's a lot of information and it's very technical, and yeah, so we'll send out a summary of the slides, Dee, and the information that we've presented, and yeah, open for any questions. We have a little, not very much time left, but a little bit of time for a couple of questions.
Orla, that was absolutely fantastic. Thank you so much. To condense 300 pages in less than an hour was really a fantastic.
Yeah.
You know, I think it's given a really good overview of what's needed, and you know, a couple of things kind of struck me on it. You know, this is for everybody in the company to get involved in. Really, it's not just the accountant. While in some companies, particularly smaller ones, maybe it may be the finance team who will drive it, but you obviously need your HR involved. You know, you really do need people across the whole company involved.
100%, yeah. And like your starting point is like when you think about ESRS 2, you have to disclose on your strategy and your business models and, you know, your governance structure. So that's really your starting point, and that's where everybody needs to get involved. Once you get down into the detail of reporting, you can rely more on the finance function and the people with all the great financial reporting experience. But yeah, it really is as a starting point. Like we would recommend certainly to our clients, like you need a team of people to get this up and running really. And I know that's difficult for small organizations, but yeah, it's a big lift.
It is, yeah.
Mm-hmm.
And I think particularly those who are part of a supply chain of a company that are going to be, so they're probably going to, and I know for members they're already getting requests from those companies on questions. So
yeah. And I mean they don't have to, if they're not in scope themselves, they don't have to meet the requirements of the CSRD or the ESRSs, but they'll have to provide data to their upstream value chain actors or whoever it is that's in scope. So yeah. But I mean, that's going to be the case for everybody. And even when you talk about smaller organizations and access to finance, like the banks are going to demand the same information. And, you know, I guess if organizations are not doing this, they may find they lose out on better finance options down the road as well. So there's a couple of different things to think about. For smaller organizations that are not in scope, they still are going to need to have some of this data available and really look at their sustainability strategy.
Absolutely, yeah. No, I agree. Just a couple of other questions. Is there a scope 3 equivalent for water and biodiversity disclosures, or is the disclosure just for direct impacts? So.
I'm not going to answer that because I'm not an environmental expert. Yeah, don't know the answer to that one, to be honest. I mean, scope 3 emissions are included within ESRS and they're coming at sector level. I've seen them, so yeah, but I'm not an expert on scope 3 emissions.
I would say there are very few experts on scope 3 emissions.
There's an answer somewhere to that.
Yeah. Do we need to disclose the process undertaken to assess the topic, even if the conclusion is that the topic is not material?
Yeah, so like you'll do that within your ESRS 2 disclosures. You're going to talk about your due diligence process and how you've conducted your material impacts, risks and opportunities. So yes, you can say, you know, water is not material for this reason. So yeah, I mean, you need to include a thorough overview of how you include it. And like technically you should be doing that every year, but I think the first year is the big lift on that, you know, to determine what's material. And then it's kind of assessing year on year, has anything changed? Is there anything exceptional? So yes, you should in the first year disclose that.
And this is an interesting question. For companies that report relatively early, they're likely to be using stale information when they're sourcing it from annual reports of companies in their value chain that will report kind of later. So if this is material, does this mean that there'll always be the annual process of restating prior year comparatives for CSRD?
Well, it does say that within ESRS that if something has significantly changed or you think it's incorrect, you need to restate it. I mean, it would be the same in your financial statements. You know, if you've valued something and then all of a sudden the value turns out, you know, it would be the same. So yes, I mean, you know, if it says for value chain, you just you include your assumptions and any judgments you've made about those estimates. That's in the first instance, and then, well, yeah, I think if something significantly changes, yeah, you would restate. Your auditor would have to help you with that, I would say.
Yes. Brilliant, Orla. That's all we have time for. That's absolutely brilliant. We'll just say the sites will also have some resources at the end that may be helpful to you in terms of our own website, the Grant Thornton sustainability stuff, and then just the ESRSs and the CSRD. We also have a network for members, which has been set up by my colleague Susan Rosney, and it's a really good way to hear from what members are doing. So the email, if you would like to join that, is on it. So thanks again to Orla. thank you to Chris, as always, for helping us in the background. We will continue the series after the summer, so do keep an eye on our website and on social media. And Orla, we would, when we have more information on the ESRSs, we would really love to have you back. So thank you.
Hopefully in Q4 we'll have the white smoke. And yeah, absolutely, 100%. Thanks a million, everyone, and thanks for getting involved in the case study.
Thank you.